Hello everyone, welcome back. I think this will be the last video of chapter 9. We talk about master budget. Uh, so this is accounting 210. In this video, I will give you a quick review of the whole chapter and then point out what you have to know, what is the most important thing that will be tested in the exam. So first thing is the background, right? And then some concept, benefits, and then um, slacking budget slack, those things I'm not going to repeat. Make sure you read your textbook and get some general idea. And then second, we said what's the meaning of a master budget is the overall budget for the whole company. And then we break it down to small parts, to two main parts first. One is production budget, one is financial budget. So let's go through, we draw the chart together. After doing each budget, I think you have a better idea. So I'm not going to repeat the first, the operating budget, because I did the video to review that part. So I'll just start. We said we always start from sales budget. And then if you have any question regarding the detail, go back to that video. You need to know how to do your sales budget. And then especially you separate it to cash sales and then credit sales, right? To cash sales and credit sales. From sales budget, you will get the production budget. The production budget, you want to know, hey, how many units I have to get. So basically, is the sales. We add the ending inventory, which is a percentage of next month, and then that's all the units we need. We subtract the beginning inventory, which is the percentage times your this month units you want to sell, so you get your production. So those parts you have to know. From production, you get your direct material, direct labor, and then manufacturing overhead, the cost. And then you also have the operating expense. Remember operating expense. So all of this will give you the budgeted income statement, which is your revenue minus cost of goods sold, gives you gross margin minus your period cost, and then we get our operating income. So the revenue is from your sales budget, and then cost of goods sold is from your operation. Period cost of goods sold is from your production. Period cost is from your operating. You get your budgeted operating income. So this is called the operating budget. It generates the income statement. And then we also said we have the financial budget. We have the financial budget. So basically, you have the capital expenditure budget, expenditure budget, and then you also have a cash collection budget, and then you also have a cash payment budget. So from those parts, you will get your cash balance, and then you also have account receivable balance, inventory balance, or blah, blah, blah. So you get your balance sheet from these three budgets, what is important, capital expenditure, we said what is called capital expenditure is only your long-term assets. So you have your plants, property, plant, and then equipment, right? PPE, long-term assets. Inventory or cash or whatever short-term assets, they are not your capital expenditure budget. Cash collection and the cash payment, definitely you will be tested for those two parts. Cash collection, we said we look at your previous month. So basically you have this different part for cash collection. Your cash sales, right? You collect your cash if you do cash sales. That is why we have to separate our sales. So your cash sales will be collected in the same month. And then your credit sales, some will from this month, some will from your previous month. Okay, we always look at the previous month, your previous month or your 2 months ago. So you always look at, if you do January, you have to look at November, December, September. So that is when you do cash collection, you collect your previous month. And then it focus on the credit sales. For cash payment, we have different parts to pay, right? You have to pay the direct material. So that is from your production budget. For the direct material, you can pay in the next month. You can pay the next month. So you look at this month, your payment, you look at, you pay next month, the payment. And then direct labor, you pay the same amount, but then you get it from the direct labor expense. And then manufacturing overhead, you adjust from your manufacturing overhead expense, and you adjust, you add back, you adjust, you add back your depreciation expense, because this is your non-cash payment item. Depreciation expense is a part of your manufacturing overhead expense, but it is not your cash payment. And then you also have your operating, your cash payment for your operating. You get that from your operating expense. We have to adjust. We have to adjust for depreciation expense and bad debt expense, and also bad debt expense. Then you also have a tax payment. You also have the dividend payment. So those are things, if the question tells you it's just straightforward, there is no adjustment. If you do the My Accounting Lab practice, that's all I require to know for those parts. But make sure those things will be tested in the exam. So let me know if you have any question. Chapter 9, I know I don't think it's really a hard one, but you definitely need to put some time there. Okay, I see you next video. Thank you.